Billions vanished from one company balance sheet and instantly reappeared in a teenager's account. This astonishing transfer of wealth characterized the GameStop short squeeze, a market event that shook powerful financial institutions to their core in early 2021. An 18-year-old student starting with $1,000 saw that initial sum explode into millions in less than 4 weeks.
He had purchased 50 shares of GameStop stock when it traded near $20 per share,
a calculated risk based on online discussions and independent research. Many established hedge funds like Melvin Capital had bet billions against GameStop, expecting its value to plummet further. They held massive short positions, believing the company was absolutely failing due to outdated business models. However, a huge wave of extremely motivated retail investors, mainly from active online platforms like Reddit's WallStreetBets community, decided to aggressively buy GameStop shares, driving the price upward dramatically each day. This created an unprecedented, powerful short squeeze, forcing these major hedge funds to desperately buy back shares at rapidly escalating prices to cover their staggering losses, further inflating the stock's value beyond all reasonable expectations. The teen's investment grew exponentially, hitting peak valuations near $480 per share at one insane point. His original 5 dozen shares were suddenly worth $50,000, then $500,000, then a shocking $8 million. Within exactly 3 weeks, his modest initial capital had multiplied by thousands of percent, transforming into a colossal $10 million before his partial sell-off of some positions. Thousands of other small individual investors experienced similar, if often less dramatic gains, collectively shifting many billions of dollars from institutional pockets to individual portfolios worldwide. This market rebellion was driven by a collective, fervent desire to challenge traditional finance and expose perceived unfair practices by giant corporations. The sheer volume of daily trading reached absolutely unprecedented levels, with millions of shares often changing hands hourly at the very height of the market frenzy in late January. Over 56% of GameStop's publicly traded shares were estimated to be directly held by determined retail investors at one extraordinary point. The entire event prompted widespread intense debate about market manipulation, regulatory oversight, and the immense power of organized online communities. Many financial experts watched in utter disbelief as individual investors coordinating through simple internet forums managed to inflict billions of dollars in losses on sophisticated financial giants. This represented a major paradigm shift in global market dynamics, showcasing a completely new era of powerful retail investor influence and coordination. The young man's incredible story became an enduring emblem of this massive financial upheaval, illustrating the amazing power of a decentralized movement against highly centralized power structures. His initial $1,000 investment became almost legendary, a true testament to the unpredictable nature of modern markets and the sheer potential for a small idea to ignite a full financial revolution. He held his position for over 25 days, seeing his portfolio fluctuate wildly by hundreds of thousands of dollars in a single trading session, often several times a day. His final profit before taxes was estimated at an incredible $9 million, a truly life-altering sum derived from a single daring trade during a historic market anomaly that defied all conventional wisdom. Millions of dollars appeared and vanished on a screen every hour. This dizzying volatility defined the GameStop short squeeze for a young investor who watched his initial capital grow into an unbelievable fortune. His journey through this market maelstrom began with just $1,000, an amount he had saved from odd jobs and birthday gifts. He risked the small sum on 50 shares of GameStop stock when its price hovered near $20 per share. The world witnessed a truly unprecedented financial event as thousands upon thousands of individual investors united online to challenge traditional finance. For 25 arduous days, he held his ground through incredible market swings. Each morning, he awoke to potential gains of hundreds of thousands of dollars, or equally staggering losses. There were moments when his portfolio value soared past $5 million, only to retract by $1 million before lunchtime. The mental fortitude required to not sell prematurely was immense. He saw his original investment multiply by thousands of percent, hitting a peak valuation of nearly $10 million. Decisions to sell a fraction of his holdings were strategic, often aiming to secure some profit while still participating in the upside. He navigated a sea of conflicting advice from online forums and news reports, often relying on his own conviction, fueled by deep research into the underlying market mechanics. The daily fluctuation in his account was not just abstract numbers on a screen, it represented potential life-changing wealth or utter financial devastation for some others involved. The entire financial world watched as GameStop shares continued their meteoric ascent, reaching $480 per share at one point. Major hedge funds like Melvin Capital, which had bet billions of dollars in short positions, faced catastrophic losses, forcing them to liquidate other assets. This created a ripple effect across the market, causing wider financial instability. The volume of trading was absolutely staggering, reaching levels rarely seen, with millions of shares exchanging hands within an hour. At one point, over 56% of GameStop's available publicly traded shares were held by determined retail investors, a truly remarkable statistic. This collective action drained billions of dollars from institutional pockets directly into the accounts of ordinary people globally. The event prompted widespread, intense debate about market fairness, regulatory oversight, and the immense power of organized online communities. Regulators began scrutinizing trading platforms, promising new rules to prevent future market anomalies. The narrative of the little guy winning against financial giants resonated deeply across many cultures, inspiring a new generation of retail traders. The young man's ultimate profit before taxes was a remarkable $9 million, a sum that transformed his life forever. This unprecedented event demonstrated the unpredictable nature of modern markets and the potential for a small idea to ignite a full financial revolution. It forever altered the perception of retail investors as a collective force reshaping global market dynamics in early 2021. His daring trade during this historic market anomaly defied all conventional wisdom, leaving a lasting mark on economic history for years to come, demonstrating the power of a $1,000 initial investment. Billions of dollars vanished from powerful hands overnight. The GameStop short squeeze saga unfolded as a stark reminder of market unpredictability, when a young man's $1,000 gamble transformed into a $9 million fortune before taxes. This historic event, in early 2021, saw 50 shares bought at $20 each become a battleground against traditional finance for 25 relentless days. His initial stake ballooned into over $5 million at one point, retracting by $1 million, then soaring to nearly $10 million peak valuation. Major hedge funds like Melvin Capital, betting billions of dollars in short positions, faced catastrophic losses, forcing them to liquidate other substantial assets. This created a wide ripple effect, causing broader financial instability across global markets. The sheer volume of trading was absolutely staggering, with millions upon millions of shares exchanging hands within a single hour, demonstrating unprecedented retail investor coordination. Over 56% of GameStop's available publicly traded shares were held by a determined army of individual investors, a truly remarkable statistic that reshaped market power dynamics. This collective action drained billions of dollars from institutional pockets directly into the accounts of ordinary people globally. The event sparked widespread, intense debate about market fairness, regulatory oversight, and the immense power of organized online communities. Regulators began scrutinizing trading platforms, promising new rules to prevent future market anomalies and protect smaller participants. The narrative of the little guy winning against financial giants resonated deeply across many cultures, inspiring a new generation of retail traders to challenge the status quo. His daring trade defied all conventional wisdom, leaving a lasting mark on economic history for years to come, showcasing the incredible power of a $1,000 initial investment. This financial revolution forever altered the perception of retail investors as a cohesive force, reshaping global market dynamics in a way few could have predicted. The mental fortitude required to hold through swings of hundreds of thousands of dollars or even millions was immense daily. Decisions to sell a fraction of holdings were strategic, often securing some profit while still participating in the upside, proving careful planning amidst chaos. He navigated a sea of conflicting advice from online forums and news reports, often relying on his own conviction, fueled by deep research into underlying market mechanics and investor sentiment. This extraordinary market anomaly demonstrated the potential for a small idea to ignite a full financial revolution, fundamentally changing how many viewed equity markets. The shares, once valued near $20 per share, soared to $480 per share at its peak during the height of the squeeze. Many smaller investors saw life-changing wealth generated from humble beginnings, an astonishing feat. The 25 days were marked by incredible daily swings upward and downward, challenging the resolve of every participant. This saga is now studied as a prime example of decentralized power impacting centralized financial systems. The market capitalization of GameStop temporarily reached tens of billions of dollars, fueled by this unusual demand. It was a clear demonstration of collective action in a digital age. Regulators globally are still pondering the long-term implications of this specific event. The young investor's journey from $1,000 to $9 million became a symbol for many. This shift represented a significant transfer of wealth from large institutions to individual traders across the globe, something rarely seen in such a short time frame. The entire financial world watched as this drama unfolded day after day. It was a 21st century David versus Goliath story playing out on a global financial stage.